If you've been anywhere on social media, any trading community, Discord, WhatsApp, or you've got notifications on, you'll have heard that in the last few hours, Trump, Iran, the rest of the world has seen a massive news event that has led to crude oil coming down 17%, Bitcoin and the altcoins pumping pretty hard, and the tech stocks up close to 10%, and some smaller caps up well over 10%. So, with that being said, what do I think of this market? Well, I'm not going to put Elliott Wave on the 15-minute time frame because, as I said in my video around 12 hours ago, I am not going to be trying to put complex corrective patterns on a 15-minute time frame, but you can just sort of see right here where we got higher lows on that 15-minute chart. We broke the 1x deviation band, tested it as support, which also lines up with these previous swing highs here, and then we pretty much shot to the races with 11 straight 15-minute bars up on the news. Obviously, because we were so far above that 2x deviation band, we were well and truly overextended, so we've come back down, and it looks like we're going to hold this 2x deviation band as support. Now, typically in an uptrend, I would want to see that market bias and 1x deviation band get held as support. Obviously, the higher a deviation band is held as support, the stronger the market. But there's really not too much to say, other than the interesting thing being that, I'm just going to mute my Discord notifications, sorry about that. The interesting thing is that the GAN swing indicator and the THT fair value bands pretty much showed the exact same breakout and retest here. So it really doesn't matter what trading strategy you use, when you get a really nice move, you'll be making money. Now, obviously, no strategy is perfect. Every strategy has its pros and cons, but I just think that was really interesting to show right there. On the 1 hour time frame, it's pretty much the same as the 15-minute time frame. You got your slightly inverted head and shoulders. Like, I was looking at this yesterday, this morning, a couple of hours ago. I was also looking at it last night before I went to sleep. I'm like, we could potentially make an inverted head and shoulders. We were still pretty early in the move back then yesterday. But this morning, it just looked really great to me. And obviously, that has played out. You can see prices above the 2x deviation and retesting it. Not much different to the 15-minute time frame. You can see on the 4 hour time frame, we have busted through the 1x deviation band, but we have not hit the 2x deviation band. Now, the 4 hour 2x deviation band is only hit a couple of times per cycle, and it typically happens on really major news events. Like, I believe this 5th of March had something to do with Trump and Iran again, and you'd have to scroll back pretty much until last year to see the rest of the examples. So it really, really doesn't happen too much. And as a result, I tend to take profits on the 4 hour 1x deviation band, which often lines up with the 1 hour and 15-minute 2x deviation bands. Whether you choose to take profits or hold your position really is up to you, but typically I find, especially if you're in a long position, you don't just want to be sitting in it and paying heaps of fees as price kind of just chops sideways, because obviously you could still see another move up, but often price just sits nowhere as we wait for the moving averages, in this case the fair value bands, to catch up. Now, obviously, being a 15-minute and 1 hour time frame, you may only end up paying funding, once or twice, whether you're paying every 4 hours or every 8 hours, but I do recommend, especially on a higher term time frame, like the 4 hour charts, because you could end up paying a whole heap of funding, and especially if you're trading on like MEXC or an exchange with really low entry and exit fees, it may actually be better to exit your position and re-enter once those moving averages catch up, and you start to see some changes of trend, such as closes and higher lows, because, instead of holding through this entire chop, you could just get in on the breakout and, of course, quick money, fast money, good money. Anyways, that was a little tangent. On the Elliott wave analysis that I talked about in my last video, we have seen a stronger wave 3 than wave 1, which means we could see a very strong wave 5, because if you remember Elliott wave 3 cannot be the smallest wave. So if wave 3 was smaller than wave 1, then wave 5 would have to be smaller again. And obviously, with that really nice strong wave 3, I do believe that wave 4 is going to be much more of a sideways correction, because wave 2 was a pretty sharp sell-off on the 4-hour time frame. A 3k 5% sell-off counts as sharp, so we may only see, you know, a 1, 2, maybe 3% correction on this wave 4, and we could set us up for a wave 5. Now, one thing to note is the 4-hour 2x standard deviation band very, very often serves as the top for at least, you know, in this case it was 2 weeks, and I've done a little bit of backtesting, and it often serves as a top for potentially weeks, months, or that was in the bull market. Since we are in a bear market now, it could mark the top before price rolls over and capitulates, where this ends up being a big upthrust before we start to see this whole range confirm as redistribution. Now, that is definitely something to watch, and I do believe the longer this wave 4 chops sideways for, the more explosive this wave 5 could possibly be, because that will give us a chance for the 2x deviation band to tick upwards. Now, if that 2x deviation band, you know, ticks up to, you know, 78, 79k, and we just tap it, you know, maybe Trump and Iran say something, and then Trump backtracks on his decision, or Iran backtracks, or whatever, similar to the tariff drama in roughly this time last year, you know, March, April last year. So that could potentially mark a top in the market. Now, on the daily time frame, we have gotten that push above both this point of control at $70,700, the 50-day TMA, as well as this diagonal trend line. So we are technically in a position of strength. And I would say, you know, if I extend this trend line a little bit, any price action up to down to around $70,700, I would still consider pretty bullish and strong. And you can see that 70,700 is just above this wave 1 peak on the 4-hour time frame, and it's just above the 1x deviation band on the 1 hour, and pretty much that 1x deviation band on the 15-minute. So that is definitely a level to watch, obviously being the volume profile POC for this entire trading range. If we do start to see a snapback underneath it, and we start to close underneath the trend line as well as the 50-day TMA, then you can consider this entire move a fake out, in which case I would be closing the rest of my long hedge, which even if I close it, it will end up being a break even, because I will have taken so many profits already by now. It would be a break even or small profit, so it wouldn't be a loss even if I'm forced to close down in these prices. So, and obviously my short position will absolutely print. There's not really too much more to talk about on the daily time frame, other than the fact that you can see we are only 4 days green on the BX Trender, and typically, if you have a look through here, we are able to see a bit more than 4 days green. So if we do get, you know, a couple of inside days, a down day to reset the swing, we could potentially get another push that ends up coming to, you know, the high 70,000, potentially even up to $80,000. Weekly time frame, not much has changed. If you do remember from my previous videos, I did talk about this weekly swing top potentially breaking. So, obviously, this week is still green. The stochastic RSI is pointing up. Does look pretty good on the weekly. Monthly time frame, we are back above that 50% level. Obviously, it's only the 8th day of the month, so we'll just have to see how the rest of the month plays out. The USDT dominance, you can see, is back underneath the 50-day triangular moving average. So historically, that means we should see at least another sell-off, which should correspond to a pump in Bitcoin. One thing you do want to watch is the stochastic RSI crossing bullish again, and obviously higher lows on the BX trender. US dollar has obviously dumped a little bit because, no one needs US dollars to buy oil anymore, or whatever other narrative is out there. And just look at that. That is quite the 4-hour candle, I must say, on the USD versus the AUD chart. Now, one thing to note, the S&P 500 is now coming into the daily fair value band resistance. So I'm definitely watching for a rejection from around 66.50 up to around 67.40. And obviously with that monthly BX red, you should treat all bounces with caution. That is something I have learned with Bitcoin. Like you can see, the monthly BX closed red in October, and obviously, we had a massive flush in November. This next bounce was a bit of a complacency bounce, and then we had another flush out. So I do believe this fractal will end up playing out very similar to the 2025 fractal, in which we'll see a bounce and then a second, even more brutal sell-off that I am still targeting 5,800 to around 6,000 points or so. Now, if we have a quick look at market data, since we have cut through the $72,000 max pain level for shorts on the monthly time frame, we have actually started to see some pretty high levels of short liquidations. Now, if you remember from my previous video, when we start to see that $400-ish million of liquidations for shorts, that can mark some very significant turning points, like the 4th of March, the 16th of March, and what was this? It was the 25th of February. Now, that day, we saw, nearly 600 million of short liquidations, and we sold off into a higher low. So it doesn't mean that, we're immediately going to roll over and we're going to 50K, 40K, 30K. It just means that this rally right now is extremely, extremely hot, overheated, overextended, whatever you want to call it. And I do believe we'll probably need a few days to cool off, potentially chop sideways, make some inside bars, whatever, reset the swing count. And if we have a look at the liquidation max pain, you can see we haven't quite managed to hit these higher price targets. Have we? 72.8. Yes, we have actually hit these shorter term max pain targets, which would theoretically suggest a continuation. But that obviously does not mean that we won't hit these shorter time frame long max pain targets first. So if that made absolutely no sense to you, I'm basically saying we could see a wick down below 70k, but provided we get a strong close, as Michael always says, wicks are okay. You want to look at closing basis because amateurs control the open, professionals control the close. That wasn't a Michael quote, that one was very old. But yeah, so it is possible that since we have not seen any continuation after cutting through these short max pain, we could test some long max pain targets. And if I jump over to the liquidation map, you can just see how many longs have piled in the last day. And, if we're looking towards that $500 million liquidation mark, because obviously trading volume now is a lot lower than it was in the bull market peaks, around $70,400 is where we're looking. And that lines up pretty well with the POC. It's just underneath it, and it's just under the Actually, it's pretty much on the trend line, depending on when we get down to it. So I do think a long limit order at 70,500, 70,800 could be a bit of a high risk, high reward play. I'm going to play it with a small position, but I would still be watching for a daily high or low above $72,000. Same thing that Michael's watching for, to expect some continuation into, 76, 77, 80K. And if we have a look at the hyperliquid liquidation map, sorry, I'm absolutely jumping all over the place today. You can see we've got some very, very spiky liquidation clusters right here at $70,000. So based off of this, I definitely think a minor correction is coming. Like, look at that 7-day and 30-day. For the first time, we're actually biasing the long side. So, any wicks into the 69, 70K range, okay, but I wouldn't want to see closes and lower highs underneath roughly $70,700. So if you're looking for a nice round number, 71K needs to hold to for us to consolidate in a strong position, and closes and lower highs above 72K as a sign of strength and likely further continuation. Anyways, thank you all for watching, and please like, comment, and subscribe, and make sure you go check out Michael Pizzino's channel, as well as Traders Helping Traders on YouTube, as they have all published some really great analysis regarding what they think of the recent move on the stock and crypto market. Anyways, goodbye.